Welcome, guys. Whilst we're waiting for another 2 minutes before we kick off, can I ask you to please get your writing materials? It is essential that you take notes. This kind of a training, we're not calling out signals, but trust me, it is more essential to you winning in this space. It is a lot more essential. Your tools can work, the strategies can be good, but if you don't get it right in the area of your mindset, your psychology, your money management, and your risk management, it will be shadow chasing. So I can't overemphasize the need for trainings like this. It is very, very key. It will determine how far you go in this financial market space. So, guys, we're going to kick off. So before I take the sidelines, I just want to introduce the trainer. He's a remarkable young man that I call my own very brother. He's been in the trading space for years and years. I can call him an authority in this space. He has real value to put out to you guys, and he will be training from the heart. He will be training from his experience. He has worked the work and is doing the talking right now. So, guys, everything that he will be saying is of great value. Write them down and go through those notes every time. So I'm going to invite to the floor to take over from me. No one aside, no one but the phenomenal Ayo Oladimeji. Thank you, bro. Over to you.
Yes, yes, sis. Yes. Yeah, I'm so grateful for the privilege of knowing you personally. I mean, you Madam Buki is someone that when you say God gives you a sister from another mother, amazing woman, um, business astute, and she's just a wonderful person. You need to know her personally. She's a wonderful person. She genuinely has heart for people. Genuinely has heart for people. Makes sacrifices to a fault. Amazing woman. I just needed to say that to celebrate her. Okay. So I did say I did reach out to her that I have observed a lot of things going on the group, and I said, sis, we need to do this training for people so that they can truly be successful trading. Now, one thing I can tell you is that it's not enough to make money in the forex market. In fact, more than 80% of people you ever know who has failed as trading forex made money. Okay, more than 80% of them made money trading forex, but they lost all the money. They couldn't retain the money made. So it is not enough that you make money. You have to learn how to retain the money. Okay, and you see, a good part of what we're going to be discussing today is not so industry specific. It is about life skills, but very important. It's about life skills, but very important. And some of these things we'll talk about, if you can even apply to any other aspect of your life, you will see some remarkable improvement, and you will be assured of success, as it were. 1 minute. Okay. So, okay. Just want to go back to my avatar. Yeah, I love my avatar. Okay, so guys, today we are looking at trading psychology, key thing that's gonna help you, you know, to move from being a retail trader, into an investing trader. Now, you see, when we all come into the forex trading market, all of us come in as retail traders. And if you understand the market structure, so I'm going to be using a lot of my my the okay notes, yeah, whiteboard, yeah. So can you see my screen? Can you see my screen? I hope you can see it. So I have 4 people following me, following my board. I need more people to follow. 5 more, 5 now, 6. I need more people to follow my board. Okay. At least we are like 14 on this call. So I need all of you to follow my board. That's how you can get value. So please, everyone ensure you are following my board. Okay. Everyone. Okay. So in the market, we all know market, the forex market hierarchy. At the very top of that market, of the forex market, are the banks. Okay. I'm gonna make this as large as I can. Oh no, someone, I need to quickly annotations. Core strategy, I think. Uh, 1 minute. Someone is annotating. People are annotating on my. Okay, just 1 minute. I'm gonna do that again. I need to set and ensure people can't collaborate on the. Okay. Okay. So please help me with this annotation thing. Ensure that you okay. Ensure that you stay out of your annotation so that it will not disrupt my okay. So we are good to go. Okay, so as I was saying, okay, yeah, I think so. We have the banks at the top of the hierarchy. Okay, we have the bank at the top of this of the hierarchy, and then mm, we have hedge funds. Okay, we have the hedge funds. Then we have the hedge funds, and then oh, by the way, I should have mentioned government. Governments are play very key roles. Okay, then we have these guys, and then we talk about we talk about speculators and retail traders. Okay. So if you understand the importance of hierarchy, you understand why you need to know some of these lessons for you to be a successful trader, for you to trade successfully. Okay. So the government impact and influence the market so strongly because they they are the managers of ec- uh, national economy, global economies. They are the managers. They decide policies, both microeconomic policies, macroeconomic policies, fiscal policies, monetary policies, all of these policies that actually impact on the market. So, as it were, everybody in the market feed on what the government does. The financial market feeds on what the government does. So that's why government positions, announcements, changes in government, and things like that impact the financial market generally. Okay, so that's very important. In fact, there are theories that suggest that there are governments that secretly are, you know, trading companies or traders, and then they deliberately initiate policies, that will give the trader advantage in the financial market. You know, Donald Trump, for one, is one president that is always alleged to always sway, the market with his policies for his own personal interest because they believe he has traders in the market. So the next, so the government is the most powerful, element that affects the forex market or the financial market generally. Then we have the banks. The banks would include the commercial bank, the financial banks, okay, and because they do a lot of interfacing with the government, and I think they are the most, or one of the most regulated sector by the government. Like the government essentially, has its grip on these banks, and they have this relation that helps the bank, that ensures the bank is protected, ensure the bank, you know, um, ensure the bank is not volatile, that the bank cannot just collapse at once. So there is a lot of assistance, there's a lot of incentives, there's a lot of, givings from the government to the bank. Now, for example, in Nigeria, you all know that the rate at which we buy foreign currencies is not the rate at which the bank buys from the government. So the forex interbank and forex market is very well different from the one in they call it the parallel market. So government created those tiers of market for forex to to ensure that the bank gain advantage when it comes to forex trading, because these guys are in control of this fund. And then, as it were, the bank itself trade forex internally. That's what the interbank exchange, foreign exchange market is all about. They trade forex as it were. If you don't know, you should know. Okay, so these guys, the banks are the major movers of activities in the market. Government is not an active participant in the market. It's not like, when I say active, it's not like they are not trading as it were. Okay, essentially, they are not like very active actor in the market. Okay, but I want to believe everyone is hearing me. If you're hearing me, someone is asking, am I sharing? Yes, I think I'm sharing. You have to follow my screen. Okay, and Benga, you have to follow my screen. So banks move the market. Okay, please, someone is saying he cannot hear or see my screen. Can you confirm? Is anyone on the call who is seeing my screen and can hear me? Anyone on the call let me know if you can see my screen and you can hear me. I want to be sure it's not everyone. Okay, thank you.
See your screen and I can hear you loud and clear.
We can hear you loud and clear. Loud and clear. Your screen is displaying.
Oh, okay, thank you. So the bank the biggest, that's why we call them institutional traders. Then the hedge funds are part of the financial, institutions, but then they are not like banks. They are more like investors, investments, trading, and things like that. So the hedge funds also are big guys. These guys, have massive money in the market. Okay, so they trade across the entire financial market. So these are part of the institutional traders. So speculators are very well similar to retail traders. Okay, actually, well, we have some group in the market whose job essentially speculating market prices, and in a lot of way they influence the sentiment in the market. They influence the sentiment in the market. Okay. So these guys focus on the policy. They are looking at what is government going to say, what is government saying, what is government doing. That's what they do. They just analyze policies of the government. They look at interest rate. They look at micro, the macro fund flows, micro policies. They look at all of those things, and then they use and the result of the analysis to position themselves. So when you see market moving, especially during high impact news, all those activity you see are usually the activity of speculators. When you see all those sharp move in the market during major impact news, that is the work of speculators. Okay. So then under them, you see, that's where we are, retail traders. So with retail traders, majorly, retail traders don't have the kind of money institutional traders have, but we populate the base of the structure. We are so many, we are so plenty. So it's like we are the at the lowest rung of this financial markets ecology. So what that means is that the sharks, the institutional traders, feed on the traders. So why am I sharing this with you? I want you to understand your position in the market. It will help us. They feed on us. They feed on our money. They feed on us. Most retail traders have something different from the institutional traders. We are traders. We don't think like the institutional traders. The institutional traders are more of investors. They approach the market as investment than those of us at the tail. The retail trader. The retail traders are more of traders, and this affects our psychology, affect our thinking, the way we approach the market. You know, we behave like little fishes in the sea. We just want to quickly catch the bait, and then the hook will hook us a lot of time. We just quickly want to eat eat the bait of the hook, then we get hooked. That's the work of institutional traders. Institutional traders are sharp, and the truth is this: they eat the retail traders. They eat the retail trader. It's just the way the market is. So making money in the forex market is about you learning how to avoid the traps of the institutional traders. Okay, learning how to avoid their traps. Okay, that is how you should look at the market. How will I not be a victim? How will I ensure that these sharks don't swallow my money? You know, I checked up something on my broker recently, and I discovered that all the money I have deposited to trade with that broker alone between 2017, when I started learning trading, and now is well over $50,000 US dollars. And trust me, some people have deposited more than that. $50,000. And we have some retail traders that have 100 millions in the market, 200 million. They are still retail traders. So just think about the numbers of retail traders. We have hundreds of millions of retail traders in the world. So how will I not be a victim? That is what we are trying to look at is this afternoon. So yeah, so the way for us not to continue to be victim traders is for us to shift two things. Is for us to shift one thing, our mindset. We have to shift our mindset, and in shifting our mindset, we have to look at shifting our approach. We have to shift our mindset, then we need to shift our approach. So now, when you are going into when you're coming into the market and you really want to make money from this, I mean, one thing I should also state at this point is that, trust me, the forex market is so huge that it can make you hugely financially successful. That's the truth. It has the potential to make us hugely financially successful. I've met and I know a few people who have been successful financially trading the financial market. So now start taking note. The most important thing, start taking note now. The most powerful thing, the most important thing. Okay. The most important thing and the most powerful thing, or your most powerful resource in the market, is your mind. If you don't have a healthy mind, you cannot be successful trading the financial market. If you don't have a healthy mind, you cannot be successful trading the financial market. So if you are coming in to trade and you want to make money, your mindset must shift away from I am here to make money to I am here to be successful. Okay? Move away from I'm here to make money to I am here to be successful. Now, that statement is an entire enterprise. It's not just, it means you have to define what success is to you. Okay? So when you look at yourself, what is success? The big deal is not money here. It is personality. It is a becoming. It is who. It is about how this enter the what do you call it, the market, the forex market, how you can leverage it as a cash cow, as a tool to influence your success. So because a lot of us have come to the point where we approach the forex market as what do you call it? As if it's the only thing, as if that's the only thing. No, see, forex market, if you're a retail trader, you must be more than a retail trader. There must be something more to you than just trading. So based on my study, most people I've seen who have been successful as forex traders, they don't just sit down trading forex alone. So that makes forex trading a cash cow for them. That makes forex trading a means to an end for them. Okay, so forex trading cannot just be your only, if they ask you, oh, what do you do, sir? I'm a forex trader. That response, that statement, it's so erroneous. Okay, and if you think about it, the guys who are at the very top of this market, is that what they are? Banks, for example, if you go to a bank and say, what do you do? Will they tell you we are forex traders? They do more than trading. Hedge funders, is the business just about trading, forex trading? No, they do more than trading. Speculators, is that all they do? They do more than trading. Some of them consult, some of them do other things. It is only in retail trading you will see someone who wants to just sit down because be a forex trader only. So why is this very important? Because it will help your mindset. It will help your mindset a lot. So how else? Number two, how else should you what else would you need to shift to be successful in the forex market? You need to shift your approach. Now you have to move away from approaching the market as a trader to approaching the market as an investor. So, like I said, the major difference between the major difference between these guys, maybe let me remove the speculators. The major difference between these guys, okay, and maybe these guys is that these guys approach the market as investors. Now, you know that the thing with investor is this. Number one, the most important question that you need to ask yourself as an investor, okay, no, this is it. When an investor is looking at an opportunity, an investment, the most important thing, or the number one question in the mind of that investor is usually not how much will I make. It's usually not how much will I make. They first of all look at security of capital. They look for, indices. They look for things within that opportunity that gives them assurance that protects their capital. So note that the first thing an investor consider when putting his money down into an investment is not how much he's going to make, but how well is his capital protected. So it is when he has looked at that, he looks at, okay, so how much will this opportunity fetch me? So at the end of the day, they weigh the risk against the reward. So if you are going to be successful as a forex trader, at the back of your mind, every time you want to enter a trade or any time you want to start trading, first of all, think, or you are looking at a setup, start looking at how much of my capital is protected with this setup. Okay, so think about capital preservation before you think about reward. Because at the end of the day, you don't want to lose all your capital. Yeah, I know some of you say the higher the risk, the higher the reward. That's the mindset of losers. I'm telling you the truth. Especially, and it's important you know that even with risk, okay, let me give you an example. And Dangote was interested in buying Arsenal Football Club. He had two major investments. Arsenal Football Club, he has his refinery that he was building as far back. And, he looked at the two investment and he said, you know what, I'm going to focus on the refinery. So when I'm done with building this refinery, I'm going to come back and buy Arsenal Football Club. So this year, Dangote said, he has finished refinery is operational. And Dangote said, can no longer buy Arsenal Football Club because the price is no longer a viable investment for him, because the price at which he would have bought Arsenal Football Club some years ago and the price at which he is buying, the value of the club now, he knew that is not viable for his capital. If I buy it now, my capital is at huge risk. And he said, I'm no longer buying Arsenal Football Club. That's the way investors think. So the fact that you find every trade setup is not every trade setup that you must jump into. You must understand. You must start approaching the market, filtering every trade setup that you see. You may see 5 trade setups that are lining up on your condition. You must be smart enough and think like an investor and say, I don't have to enter these 5 trades. I don't have to enter all these 5 trades. And then you are looking at which of these 5 trades give me the best risk to reward ratio. Which one gives me better capital preservation? if it goes against me? So you have to start thinking like an investor. Stop thinking like a trader. Now, so what are some of the other things that quality you find an investor? Investors are always patient with their investment. They're patient to enter into the investment, and they are patient to get out of the investment. So the wait, oh, when it was repeated for so many years, this man, Warren Buffett, was one of the biggest, highest shareholder in Coca-Cola. But for so many years before that time, in the 1970s or 80s now, the value of Coca-Cola share was dropping, and while people were selling off, Warren Buffett was buying it. It would drop, he would buy. It would drop, he would buy. For so many years, he was not making profit. And he did not sell off his positions. And then came, I think, 90s. Coca-Cola value picked up again. Boom. The man started making crazy amount of money, became the highest shareholder in Coca-Cola, was making a lot of money. Coca-Cola, I don't know if he has fully divested from Coca-Cola, but that's the way investors think. They are patient. They are patient in entering to the market. They are patient in getting out of the market. I had a setup that I got into last week, and then I got out. I made profit. But looking at this week now, I saw that the trade, if I had waited on, as in the kind of money I would have made, would have been crazy now, because market just went up. Boom. So patience is very key. Patience is very key. Okay, so some of the things I think we need to start doing is, I'm going to recommend 3 things to help your mindset in, for prepare your mindset for success. Number 1, I'm going to relate to, how your affirmations, how you use your words. One of the things affirmation does is that it aligns our mind to the positives we are looking forward to the positive we dream and aspire for. Sometimes it looks like, especially for some of us that have not built those culture, it looks like, oh, there was this extra stress for my life. Trust me, affirmation is powerful. You need to have least a statement of faith, of positives that you say concerning yourselves, concerning your mind. Important for regulating your mind, important for realigning your mind. As a trader, can you create affirmation telling yourself, I am a successful trader. I am patient before entering trade. I wait for the best trade for me. I'm making $100,000 this year. That's like a goal, but it's part of your affirmation. Or I will not make hasty decision when I lose. Just list of affirmation. I may not have it. What do you call it? Be able to articulate an affirmation template or sample for you right now, but they are there. If you Google out there, affirmation for a forex trader, just ask ChatGPT, ask one of these AI, or ask Google AI. It will give you affirmations that traders actually say to themselves. So affirmation is very important. They are just statement of faith, statement of belief, statement of positives that you speak about yourself as a trader. Very important. I cannot tell you how important it means. It will look like it's insignificant, but it's one of the most powerful things you want to have as if you want to be successful as a trader. When you have your list of affirmation, put it very close to you where you can see it regularly, every day, every morning, before you sleep, before you start trading, and say it, speak it out loud. Little wonder the Bible says in Habakkuk chapter 2, write the vision, make it plain, so that those that read it will run with it. Make sure the picture of the success you are defining is captured in words and put it where you can see it every day. This is not motivation speaking. That's why they call it psychology of trading, because you need those things to have influence your psychology, to to influence the way you see things, the way your perception of things, the way you respond to things, help with your emotional regulation. So if you have been trading so far and you don't have your affirmation, please stop that habit. After this training, find a way and create your own list of affirmation and devote yourself to it every day. Number 2, because I don't want to keep us here for so long, is also where is my note? Okay, number 2, this one is also very important. Association. You see, it's good that when you are starting out as a trader, especially for those of us who are just starting out as traders, it's important you work on your association, because we are coming into an environment, an industry where a lot that is malign, abused, misunderstood, stereotyped. A lot of people believe that forex trading is gambling. A lot of people have had terrible experience trading because they had the wrong foundation, and then they believe the market, there's nothing you can do. You cannot make money from the market. And then you have all of these people surrounding you. And every time you are taking your baby step, you're trying to take your step of it, you hear their voices, boom, boom, banging everywhere, left, right, center. The truth is you will not succeed eventually. So I always tell people, when you start out as a forex trader, it's important that you review your association, you review people that you surround yourself with. You want to stay around people that have common objective, common trade with you, people that believe in what you are trying to believe in. Okay, and let me also say this, please. Don't let result be your biggest motivation as traders. Let process be your biggest motivation. Let me say that again. Ensure that your result is not your biggest motivation. Ensure that a process is your biggest motivation. Why am I saying this? Because results are always not typical. And the fact that you see losses today does not mean that you are not going to succeed eventually trading. So if you allow results to be your biggest motivation, you will give up easily. You will give up on time. I was saying something to Mrs. Bookie that I said, I can't remember now. I said that Jifu is really powerful. I love what I'm seeing. I love what I've seen so far. And I said, but do you know the funny thing? In this Jifu community, Rex Jifu community, if we put money on the floor and ask people to start picking it, Do you know that we are going to still have people in our midst who will still be poor, who will still be broke? We will still have people who will still be broke in our midst if we say people to start parking money on the floor. And the simple reason why that will happen is because of the way people think, the mindset, what people place priorities on, and so on and so forth. Association. You see some people who will tell them, they are asking you to pick free money. Maybe it's juju money. Maybe it's money that that they have laced with juju. And you see some people who say, that's true. I did not think about it that way. And then they will leave the money on the table. And say, because they will not believe, how can somebody just be saying, come and pick money on the table? Come and pick money on the table. I saw a comment on the group one day. Someone said, is it real? Is it true? So don't let result be your biggest motivation. Ensure that the process is your biggest motivation. Now, what process do we create, to be successful trading? What process? Now, I'm going to put this. These are very important. Number one, very important, please. Make sure you have a trading journal. Make sure you have a trading journal, and this is very important. Make sure that every trade you are entering, you are recording it. Now, what is a trading journal? A trading journal to a trader is like, what do you call it? Is like a sales record, or a bookkeeping process for a business. You can imagine a business without bookkeeping process. No sales book, no in stock, no inventory. There's no balance sheet. There's no profit and loss statement. You just imagine a business like that. If they brought a business like that to you and say, come and invest in it, will you invest? No record of business. So this is part of thinking as an investor. You are here to be successful, not just to make money. You are here to be successful. You see, because you should look at it as investment, like business. How can you have investment and you don't have record of your investment? You brought $500, you just put it inside your broker, and that is it. And the things going up and down, and then let there be a record. I put in $500. Today, I entered 2 trades: GBP, JPY. I entered gold. I entered BTC, USD. These are the what do you call it? This is my take profit. This is my stop loss. This is the price at which I enter. What is the result at the end of the day? Oh, it was a win. This is how much and the pips I won, or the amount I won. Let there be a record of your trade. This I'm sharing with us require discipline. Because why is keeping a journal very important as a trader? Because the truth is this: what makes us successful as a trader are the lessons that we learn. They are the lessons that we pick up in our journey as traders. It's not even so much. Okay, let me ask you a question, and I want response, please. How many of you has had this experience so far trading in Jifu, where there is a trade, you pick the trade, everybody pick the trade, other people's own ended up in profit and your own ended up in loss? If you had that experience, type in true in the chat box. type in a trade in the chat box if you have had that experience. You got into a trade, other people's own went into profit, maybe your own ended up in loss. Can you all hear me? Can everybody hear me? Hello? I hope you can hear me, guys. Okay, you can hear me. So now, good. So if you have you had that experience? Yeah. Oh, yes, you have experienced it so many times. So a good number of us would have had that experience. Okay. Now, we imagine, what do you do when you have that experience? You ask yourself, what happened? So that is an experience you have to learn from. If you don't learn if you don't research, you don't study what happened, what did I do wrong? You know, why did other people's own end up in profit? Why did my own didn't? Then when if you don't do that, there will be no lessons, and it's the lesson that will help you to make money. You know, the truth is, I use Sniper Pro alone, use on Jifu. But the way I started using Sniper Pro when I signed up is not the same way I use it today. I remember last week, Mrs. Buki and some of our leaders jumped on a call with me, and we're looking at some the Sniper Pro strategy. And do you know the funny thing is that right on those calls, we learned on that same call that day, we learned something new, and we arrived at the conclusion and said, okay, if people are going to be taking this trade, let them consider this, let them consider that. Now, because we learned from those experiences. Oh, we took this trade, it didn't go the way we expected. So, but a trading journal will help you to be able to do proper investigation. Do you know that you may not even how would I explain this to you? You may not know that you are trading so well with your result alone. You will not know that you are trading so well with your result alone. Because if you have a trading system in place, you have your strategy in place, and let's say you are taking trades, 1, 2, 3 trades, and those trades maybe end up in a loss. One trade, first trade loss, second trade loss, third trade loss. It's easy for you to quickly believe you are not doing something right, and you begin to look for how to change what you are doing. Those results are not entirely proof that you are not doing something right, because the market has a mind of his own. Nobody, nobody has, as retail traders, we cannot single-handedly change what's going to happen in the market. We, as retail trader, we are only doing aligning. We try to align with what's happening at the activity of the institutional trader and take advantage of it. So it's possible that you are doing the right thing. You are doing the right thing, but you record 3 consecutive loss, and then your 4th trade and your 5th trade are the one to give you profit. And guess what? The profit we eventually swallow up the losses, and you end up in profit. So what I'm saying is that it's only when you are taking journal, when you are journaling, taking down records of your trade, that's when you can believe in your process. You can know if you are doing the right thing or not, if your system is working for you or not. If you don't have a journal, once your result tells you you are failing, you will give up on it, and that may not be true. Sniper Pro, as powerful as I think it is, have I lost a trade on it? Yes, sir. Yes, ma. I have lost a trade on. What am I saying? I've lost trades on Sniper Pro. In fact, I think was it 2 weeks ago or so? Yeah, I think maybe last week. Last week I took like 3 different trades, and that was the first time it was happening to me using Sniper Pro. And it's like those 3 trades they just hit stop loss, pack, 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 pack. And if I didn't have a record of my trade, I would have maybe fidgeted and say, something is wrong. Go, this Sniper Pro is not working again. No. But because I have record, I'm looking at it. What condition did I see before I entered this trade? I saw, I saw this, I saw this, I saw that. Then I concluded, okay, I'm fine. I'm still good. It's just one of those things in the market. It's not every time that your trade will set up. I mean, your strategy will set up and the trade will align with your setup. Not every time. Okay. So journal is very important. Now, have a trade system. Have a trade system. Now, a trade system contains your rules. What are my trading rules? What are the things my must do's, my must not do's? Something like, for example, I will never trade without a stop loss. You know, a lot of people, and maybe some people are guilty of what I'm about to say. A trade is going against you, and then you are in your mind, you say, hey, maybe the trade we turn back, then you remove your stop loss. Then you remove your stop loss. If that has ever happened to you before, and can you put a 1 in the chat box? Your trade, you're in your trade, the trade was going low, and then it was moving towards your stop loss. Then you remove your stop loss or you shifted it. I've done it before. So if you have experienced that or you have done that before, type a 1 in the chat box. Put in a 1 in the chat box if you have ever done that before. So we okay. Yeah. So it happens sometimes. So you need to have a rule or something like another situation. You enter a trade, it's going in stop loss. Then you now add another trade on that, thinking that okay, it will eventually go your way. So don't chase a losing trade. So that can be part of your trading system. Your rules. What are your rules? I will never chase a losing trade. I will never. What do you call it? There's this one you call edge trading, edging. You know, there are times that you edge as a strategy, but there are times that a lot of us edge out of arbitrarily, out of fear. You have entered the buy for a trade. The trade is now selling. You now enter a sell as well, thinking if this one does not profit me, this one will profit me. No, that's wrong. If it's a trading strategy, if you're doing it as a trading strategy, maybe you bought in line with the trend, and then you are in profit, market has gone up, and then you see opportunity for you to sell on the pullback. That's different. Then you sell, but you know that what do you call it? You know that I'm going to get out of this trade at a point in time. So your rules is very important. You need to have it. Number 2, you need to have your strategy. Now your strategy has to do with what do you see? What are you analyzing? You know, what conditions do you want to see in the market before you jump into the trade? Okay, so what you need to have a strategy in place. And talking about strategy also, what is my entry strategy? What's my exit strategy? You need to have that in your trading system. Very important. Number 3, which I think is very important, as part of your your trading system is your risk management. How do I want to manage risk? How do I want to approach risk? You know, there are a lot of things that you must define in your system. Number one is amongst when you're talking about risk management, what's my capital? How much am I bringing in? The good thing is that I saw Madam Buki did something very good today. She posted a poster with, let me see again, a poster with risk management. Where is it? I think I saw something like that today. A poster with risk management stuff. So yeah, it is there. And I think it's a good one because I've checked it. I think I can also recommend this to you. Okay, $100 when you have $300. What risk should you be using, and so on and so forth. But so you have to define what's my capital, but it's not enough for you to just have a lot size and use it. I always think a better way is for you to think about define your risk rewards. Okay, define your risk reward. Did I say risk reward? Define your risk. So for example, I have $500. For example, I have $500. Now, these are the very important question. How much of my $500 do I want to risk per trade? You need to know how much you're willing to risk per trade. Let's say per trade, all I want to risk is 0.5%. Okay? 0.5% is what I want to risk. That's less than 1%. Okay? So, and I have $500. That means that all I want to risk is just about $2.05 out of my $500 on one trade. So I should know. So what's my risk per trade? I'm just using this as an example. And this is a conservative, at conservative level. This is my capital. Then one other thing you need to have is when you know your risk per trade, then you should also know your drawdown level. Your drawdown level is that, see, if my account has a drawdown, is in a loss up to, let's say in this instance, 40% of my capital, which is $200. If I'm trading with $500 and I have a 40% drawdown, then I will stop trading. That's your drawdown level. Once it's 40%, I will stop trading. I will wait. So know what your drawdown level is. Know what know what that is. So this is very important. Now, there's a tool that we should always use when it comes to this. For those of us who don't know, let me quickly bring it to us. It's called my FX book. So this if you come to my fxbook.com and you come to position size calculator, this will help you with your risk management. So I want to take, let's say, gold or BTC. Okay, it doesn't have BTC, unfortunately, but let's say gold. I want to trade gold, for example. I'll put the currency, I'll put the account currency, which is USD. Then what's my account size? $500. How much do I want to risk? You have defined it. I want to risk 0.5%. Then what's my stop loss on this trade? Let's say my stop loss on this trade is $40. It's 40 pips. I ask it to calculate it. I asked it to calculate. Now it has calculated it. And it said for this trade, I should use 0.06 lot size. Use 0.06 lot size. So if I were to take a trade in gold, now the good thing about my FX book is that you have the app version, you can use it, you can use the web version as well. So you can download the app every time you want to take your trade. Make sure you know what you are risking before you jump into that trade. Because at the end of the day, what determines the variables to your risk management include your account size, the rate you want to risk, okay, and your stop loss. These are the variables. And if you don't want to use risk rate, you can change it to money. Money means when you change it to money, it means that instead of using rate, you can say I have $500. How much do I want to risk out of my $500 on this trade? Or all I want to risk is just $2.5 or $3. Let's now say all I want to risk is $10. I will ask you to recalculate it, and then you see. Can you see the lot size? It says I can use 0.25 on $500. Now, $10 is how many percent of what do you call it? That's like 4% of $500. That's 4%. So that means I want to enter a trade and I'm telling myself I am willing to risk 4%, which is $10, where my stop loss is $40 and 40 pips. So if I take this trade, this is just one trade though. So note that. So when I am now entering gold and I'm now taking 1, 2, 3 positions, the more positions I take, it increases what I stand to lose. And on every trade setup you have, please make sure you pin your risk to the trade setup, not to the number of trades. So what do I mean by that? So you see a trade setup, good, gold, GU or something, and then you want to enter the trade. If you know all you want to risk, all you can afford to risk out of your capital is just 4%. Do a 4% calculation of that. And now, if you now want to enter those trades multiple times, let's say 3, 4 times. Now, this one is saying 0.25 is my lot size. So if I want to enter it, let's say 3 times or 4 times, I will divide 0.25 by 3. And then, meaning that for each of those trades, the maximum lot size I must use will be 0.08, 0.08 for each of those trades. So by the time I sum up the 3, it will not be more than 0.25, which is 4% of my account. Okay, please, this is very important. See, Forex, success in Forex trading is not about doubling account. It's not about, oh, I've done 100%. I see us getting excited on the group. Oh my God, I've done 10% in one day. I hope you know that 10%, in fact, if you do 200% in one day, or I hope you know that market can take it back. if you do not factor in some of these things we are talking about. So that's one. Let's continue with our board, with the board. Now, another thing I was explaining to us that is also important is this. Also have your growth rate or your growth target. Let me put it that way. It's good you have that. And when you are looking at your growth target, please, I tell people, don't prefer, let me look at it. Have a target like, okay, I want to grow this account. I tell people, make your growth target weekly. Okay. For example, I want to grow this account 5% per week. 5%. Don't use daily. You know why? It's not every day you will find trade. It's not every day that trade will show up. It's not every day that you find, if you are looking, I'm talking to people who want to be successful here. I'm not talking for people who want to think they are, get into the market, make money and make noise. I can tell you, if you are there, some of us have been there before, 2017, 2018. Those who know me as far back as those years trading, and Madam Buki can attest to you, we shout, we make noise. Hey, oh, I've done 20% today. I've done 30% today. At the end of the day, some of those of us those people today, ask them, come and trade for it. They will say, never in my life. Why? Their hands have been burnt. So, your growth target is 5% per week, for example. Okay. And do you know, funny enough, 5% per week is a fantastic result. I hope you know that. You grow your account 5% per week. Now, I don't know how many of us know this boy called Dr. Wills. The guy has moved to where's this? What do you call Dubai now? Dr. Wills was a young guy in Nigeria. I don't know if you have heard of that guy before. A young guy here in Nigeria trading Forex. Of course, he also learned the hard way and eventually got it right, targeting what do you call it? Gradual growth instead of exponential and all these account, what do you call it? Swelling up all of a sudden. And over time, he pitched to investors in Dubai. And those guys looked at his proposal and said, this makes sense. Today, this young boy, Dr. Will, sits on investment trading of millions dollars of investors who invested in him. So today he has moved from being a retail trader. He's doing, investment trading, but it's over there in Dubai. Now, this is where I'm going. If you find a serious investor and you say, you know what, I'm trading and this is what I can give you. I can give you 5% every week, or that will come to about 20% per month. I can conveniently give you that, sir. Once the investor can verify your claim that you have the skill, you have the resources to deliver that, I tell you, they are going to invest. Because 20% per month is like 240% in a year. That's 240% growth on their capital in a year. They will jump at it. Because it's great, and you don't even have to offer them that much. 240% growth is a lot for investors. In fact, if you offer some investor that kind of growth rate, they may tell you that they are not interested. Not because the rate is not good, because it is too good. Okay, so when you are developing your trading system and your risk management system, look at your target. And I'm advising you do this because for a lot of us, we're intraday traders. So look at your profit as per, maybe on a weekly basis. I recommend that, weekly basis. So at the end of the week, you now do an account. Okay, this week, your trade journal will help you establish that. Because your trade journal will show you all the trades you took for that week. How many pips did you make in profit? How many pips did you make in loss? And then to show you your net profit. And then you can see, oh, out of my $500, at the end of the week, I have made, let's say, $200, which is that's like how many percent? That's like, if I'm right, that'll be like 40% growth at the end of the week. Oh, which is a lot. So if you are trading, you make 400%. That's a lot. I mean, 40% in a week. That's crazy. Okay. So, but have this in your mind that, okay, any week that you outperform your target is a week that is going to compensate for the week that you may end up in loss. Okay, so that's important. Now, before I continue, see, one of the things a lot of people don't want to do is that they think Forex trading does not have to be mechanical, like I am telling you now. See, that's why I say your mindset must change. I don't want to be a trader. I want to be an investor. I want to be a business, be business thinking with this enterprise. If you are going to be successful, it has to be mechanical. You have to have records. You have to have plans. This is what they call trade system or trade planning. Every week, you should know how many trades you need to take to help you achieve your goal for the week. You should know how many pips you will need to make because sometimes one of the things that make a lot of people lose is over trading. They've already traded and made profit. Okay? For example, for me now, maybe if today will be my last trading day this week. Today may be my last trading day this week. Why? Because I think I've already hit my target for the week. The market is not going anywhere. Don't be in a hurry to make 100% in 1 week. It's too much. Is it possible? Yes. But don't build a culture of I am a successful trader. See, if you have it, 10 years, you will be in this trading business. I hope you know that our forex trading has a high failure turnover. Maybe 1 out of 10 to 15 traders that enter the market end up being successful. So if you don't want to be part of those group you don't want to be part of those who will go and tell those stories. I'm sure that some of us have had those stories. You tell them, oh, come and do Jifu, it's forex trading. They say, I've traded forex before. Don't worry, I traded forex. Oh, God, I lose. If you don't, please, for the purpose of this, is there anyone who has spoken to people about forex and they got that kind of response before? I just want to know. You've told people, trade forex, you are trading forex now. You tell them, oh yeah, come and do it, and then they told you, what are you talking about? I traded forex, I lost all my money, I lost this, I lost that. Hello, you have had that experience. Can you let me know? Yeah, we have people like that. So if you don't want to be someone like that, take this thing I'm sharing with you and make it, take it as holy grail of this forex trading you have. I know you have bills. Please, when you come, see, I'm talking to people who want to be successful, long-term trading. So before Jifu, I have been trading, but what Jifu has done to my trading is that it has enhanced it. My profit level has grown with Jifu. But before Jifu, once I hit my target, sometimes I hit it, sometimes I don't hit it. I take it. And nobody knows I'm trading. I just there. So if you want to stay long and be successful, you have to take these things as very important. It has to be mechanical. It has to be, because it's a profession. Forex trading is a profession. Every profession are mechanical. There are things you do to be successful in it. Forget it. Forex trading is not any way you can just come arbitrary. If you don't have a system, you don't have a plan, you will not succeed as a trader. So when it comes to forex trading, I know you have needs. I know you have financial pressure and all of that. Please don't treat forex trading as let me quickly come and make my child's school fees here. Is it possible? Yes. But it is those pressure that regulate your emotion, affect your psychology in trading, and at the end of the day, they are not good. They are the red flags for trading. They will help you to lose your money. Don't try to grow your account. Don't look at somebody else's result to determine your own process. Separate it. I've seen a lot of people use lot size on this our Jifu group, and I shake my head. I shake my head. They are excited. Oh, yeah. I shake my head. And we all know how difficult it is to put money together in this present economy. Guys, don't trade stupidly. Have a plan in place. Set up a plan for yourself. And there are a lot of trading plans template online. If you search for it, maybe you can look for the one that you think fits you, and then you can adopt it. But for the sake of this training, I'm just sharing some of these things with you. What are the things you should have in your trading plan? You know your capital. Okay? So it's good you grow your account, you are seeing it grow, because it's growth. It's like you plant a seed, it is germinate. You have to just be, no matter how you are hungry to eat the mango from that seed you planted, you have to wait 4, 5 years, 10 years before you eventually start eating mango from that tree. So that is the way you should take your forex trading. If you are going to be successful, if you really desire success. Guys, I know pastors, who have big global ministries in Nigeria. I will just not mention names. But guess what? Some of you think some of these pastors make their money from tithes. I'm shaking my head. I know a particular pastor, very popular. If I mention his name, most of us may know him. He has a trade. I mean, I don't know, maybe before he became a pastor, but he has always been a trader. And when he went into full-time ministry, there are people, his church member, that he teaches trading. They have a trading station. This guy financed ministry from his trading account, from his trading enterprise. It's not every pastor that is using tight money to live life. This particular pastor, that is not a story, it's not fabu, it's confirmed. It's that one I know 100%. He has a trading enterprise. He has a trading team in his church, forex trading team. Invested in crypto. So if we know what we are doing, guys, what I'm trying to tell you is that long term, forex will make you hugely successful. But don't forget where I started from. That's why I said I will not advise you make forex the only thing you are doing. It's either you are employed and you're trading forex, you have your business, you're trading forex. And if you want to build a business, because forex has value chains, it has, like an ecosystem. If you want to build a business from forex, you can also do so. We have people who run trainings. For a good example is Madam Buki. She's not only sitting down trading. There are other things within the forex industry that she's doing. The network marketing side is a business. The copying trading product is a business. If she decides to add training and start charging people for the training too, that's another cash flow within the same forex industry. So don't sit down in front of system 24 hours, say the only thing I'm doing is trading. It will put a lot of pressure on you and it will affect your chances of succeeding as a forex trader. Okay, finally. Okay, before I go to this last thing I want to share with us, which is very important. Do we have questions? Let me just see. If we have questions, let me take your question before I talk about the last thing. Questions. Question. Do you have any question? So to just quickly summarize my point, while I'm waiting for anyone who may have question, I said it starts from your mindset. So, and I said to change your mindset to condition your mindset for success in forex trading. I said you should speak a positive affirmation to yourself daily. I said you should work on your association, connect with the right people, trade with the right people, review your association, who are the believers around you, who are the people who are the doubters, find a way to adjust your relationship to reflect the goal you are setting for yourself as a trader. Number 3, I said change your approach from a trader to an investor. Think investment. Look at focus on the highest probability trade setups. Focus on trade that give you the optimum result on your account. Okay, that's very important. Okay, so I said that. Then we talked about, I told you about the importance of trade journaling, and I told you trade journal is very important. It's like your bookkeeping system or process as a trader. You need to have it. It's very important. You cannot sweep it aside. I know some of us have started trading with that habit of not having one. But after this call, go and get a journal, get a book, and start taking records of every trade you are taking. Again, what would your trading journal look like? The currency you are traded, include the trade session, So because that will help you to know which trade session should you focus on. For example, presently we do US 30, 2:30 Nigerian time. Is a process of journal that produced that strategy. The person who is teaching you that US 30 and only does it 2:30 p.m. Nigerian time is a product of journal. He has been taking journal US 30 and discovered that I took US 30 during London session. This is the result. I took it during New York session. This is the result. So his journal was able to reveal a truth to him that he wins more when he trades it 2:30 than when he trades it at other time. And that was how he arrived at that strategy and say, okay, only 2:30 p.m. we'll trade this and we'll make money. And he has been doing it consistently, I was told, and he has been making a lot, and people have been making money. It's a product, that's the product of journal. That's what journaling will do for you. So the currency you are trading, the trading session, you are trading that, your entry price, your stop loss, your take profit, and include your the final outcome, whether it ended up in profit or loss, and then the conditions that you saw. That so it's more like just saying, like what you can do with that is you can use a point system like Sniper Pro. If, for example, you are looking for 5 conditions and you saw 4 conditions, you can check 4 condition met, 5 condition met, 3 condition met. But it's good you know which conditions are meeting and all of that. It just helps. So those are the things. So you can have it in form of a table, and then you can just be filling it. If you don't want to do physical hard copy journal, maybe you can create a journal on your system, Excel, and start doing that also. Okay. Then I did talk about having the trading plan or a trading system. And I said in your trading system, you should have your set of rules, the rules you will never violate. You should have your strategy, what are your analysis and your entry and exit strategy as well. How do you enter? How do you come out? And then we talked on that system. We are talking about risk management. We've talked about, I think I've tried to show you how to calculate using my first book application. How you can easily use that to determine your lot size. But again, we said make sure that you have so don't trade without knowing your risk, because that's what forex trading is all about. We always pride that forex trading is not as bad as people think, because you have opportunity to calculate your risk even before you enter the trade. So determine how much you are risking. And for the purpose of this training, and which I think is very popular, if you are going to ever risk, I suggest risk between 0.5% of your account. Now, what I risk personally varies. Sometimes I use 0.5. It all depends. If I think the probability or the viability of that trade, that trade setup is not really strong, and I don't have what do you call it, and I don't want to miss out of it, I drop my risk. Okay. So use between 0.5%, maximum 3% per trade. This is what I recommend to you. Okay. Sincerely, I recommend this to you. Okay. And then you say your drawdown level, also determine that. That one has to do with how much of stomach you have for risk or losses. So how much do you want to see your account drop down to in case of bad trade before you take your losses? 40%, 20%, 30%. I know some people, they do 60%. It's about you. Then have your growth target. What should your growth target be? It can only be a recommendation. Yeah, I think that also is a personal thing you have to decide. Do I want my growth? The only thing I'm gonna tell you strongly you should do is that do weekly, monthly, or quarterly target. I know a guy that does yearly target, yearly target, but the guy is a hugely successful trader. This guy takes away like 4 million, 5 million, from the market trading. He's a position trader. He's not an intraday trader. He's a position trader. So it looks as a profit at the end of the year. Okay. And then, yeah. So I think I've done a quick recap that way. So the final thing I want to quickly share with you, which is very important, and this may be like a risk, there's a risk, entry and exit strategy for you. It's called the risk reward ratio. I don't know, risk reward ratio. I'm sure a lot of us have heard about it before. It's called RRR. Now, how does risk reward ratio work? So the concept of risk reward ratio is that you estimate what you are targeting based on what you are risking. Okay, so this is it. Let's say, but the amazing thing about risk reward ratio is that is the powerful thing, is what helps you to be profitable consistently. So let's say this is our risk. Let's say this is our reward. Okay, so now let's say you have determined how much you are risking: 3%, 1%, 2%, 0.5%, as the case may be. Now, when you did your calculation on a particular trade, maybe the risk is let's say the risk is that your risk is 3%, right? Or let's say your risk, okay, let me use pips. Let's say you are risking 30 pips. Okay. Now, risk reward ratio says that if I'm risking 1, my target may be 2. Okay, my target may be 2, or okay, sorry, my target may be 1 for 1, 1 for 2. I'm just giving you an example, 1 for 3, and so on and so forth. 1 for 4. So for every 30 pips I risk, when it comes to reward side, that means that if I'm doing 1 for 1, my take profit will also be 30 pips. If it's 1 for 2, my take profit will be 60 pips. If it's 1 for 3, my take profit will be 90 pips. If it's 1 for 4, my take profit will be 120 pips. Okay? Now, imagine that let's say we take 10 trades, and out of these 10 trades, we lost 7. 10 trades, something happened, and with this our Jifu, it will be difficult to take 10 and lose 7. But let's say something happens, we took 10 trades, we lost 7, and then we only won 3. 3, 3, 3, 3. Now, let's look at what our risk reward ratio looks under each of these risk reward ratio. For this one, 7 times 30 pips, we have lost 210 pips. That's the loss. So this loss, like net profit. Here, we have lost 90 pips. We lost 210 pips. Here we gain 90 pips. So we lost, out of that 10 trades, we lost 7, we won 3. So what the total loss lost pips is through 10 pips. The total gain is 90. Here, it is 180. Here, it is 270. Here, it is 360. Okay, so if you're looking at what I've drawn, what I have here right now, you see that okay. So look, if you look at what we have here, look at this. You see that the higher your risk reward ratio, the higher your profitability. The higher your profitability. And that's what I want you guys to master. This is what I beg you in the name of God. When you are trading, don't joke with your risk reward ratio. Don't joke with it at all. Don't joke with it when you are trading. Because that is the way you can stay profitable. Because the day that you will eat a lot of loss will come. It's inevitable. That day will come. But if your risk reward ratio is healthy, okay, that will not be a problem. So as a principle, any trade that does not potentially give me at least 1 to 3 risk reward, I am not interested. I am not interested. And note, I just gave this as an example. So given this principle of risk reward ratio, when I'm calculating my stop loss, I determine my take profit based on my stop loss. So if my stop loss is 20 pips, I make sure that the minimum I will get from that trade is 3 times 20, because I'm using 1:3, for example. 3 times 20, that's 60 pips. So if my stop loss is what do you call it? If my stop loss is 20 pips, my take profit target will be 60 pips, which is 1:3. I have to make 3 times as much as I am risking. Okay, so when I'm trading, I'm targeting that. And then when it's a trade that is going in line with my trend, I just leave it to run. So sometimes I see trade that is 1:11, 1:10, 1 ratio, like GU yesterday. GU yesterday, they gave 1:, where is it? GU yesterday, it was loud, it was massive. This was it yesterday. GU sell. This was it. Oh, sorry. So gotten on that trade there, it was a 5 pips trade, stop loss. And look at, I remember that this is where I set my take profit. S3. It was 1:11. So 1:11. Okay, I don't know if you can see my screen, but I hope you can see it. 1:11. That's what it gave me. So this is the way to trade, guys. This is the way to trade. So and he eats profit.
Recording in progress.
Oh, okay. I understand you are not seeing my screen. I'm coming. Let me. Let me do that again. Okay, so you should be seeing my screen now. So this was the trade yesterday. One reach 11. This was it. GU Sniper Pro. He called the sell. 5 pips. It was crazy. I sent it to one of my friends who I asked him to come on board and Jifu. This was the 5 pips trade. And I targeted support number 3 and support 3 here. And look at it. He hit the profit. 5 pips to make 58 pips. It was banked. It was banked. And if you remember that yesterday, it gave us a buy. So that I can show you some of these so that you can see that I'm not, let me show you. Buy. I sent the screenshot. Yeah, oh, where is it? See, this is the screenshot of that trade that I took yesterday. Yeah, this is the screenshot of this same trade that I'm showing you when I took it yesterday. And this, let me, yeah, this is it. This is when it had not played out. This was the screenshot of that trade yesterday when it had not played out. It was 5 pips. Now look at the buy. That's him yesterday. GU buy. Can you see it? Go see the result. Oh, what am I doing here? So see. Okay, so see. So anyway, I'm just trying to show you how this risk reward ratio, you know, why it's powerful, why it is very important. Every one of us master it. So this was the buy. I think it was somewhere here. Yeah, this was the buy. Yesterday, the screenshot I showed you. This was the buy here. And has it hit profit now? Yes, it has. In fact, it went up and then eventually went up to hit profit. But if you look, what I'm just trying to show you is that if you look at all my screenshot, all my trade, it's nothing less than 1:3. In fact, this one is more than 1:3. So when I'm doing my analysis, I'm looking at trades that can offer me nothing less, minimum 1:3. This was gold yesterday. This was gold yesterday. What time was this? This was around 4:56 UTC yesterday, gold, guys. It's good, well, that's too much. Okay, oh, sorry, I don't know why. Okay, sorry. So this was the gold yesterday. I think it was around somewhere around there. Somewhere around there. And today, look at it. Profit taking. It took a long time. In fact, look, it came back to the entry. So, but already, I think it already took profit, or significantly, it already took some profit. The trade was somewhere around there. I can't remember. I think it was somewhere around there. Let me check it again for clarity. Okay, this was 1456 yesterday. Yeah, 1456. Oh God, help me. See, I just want us to win. I'm passionate about us winning. So it was somewhere around there. So I'm right. It was somewhere around there yesterday. Went up significantly, good profit. And today it has even gone above that now. So guys, risk reward ratio, understanding it will help you. We help you a lot. I want all of us to understand it. I want all of us to make profit from this. I think it's so painful to know something that can really help and liberate people, and then we are not helping people to maximize it. I told Sister Buki, I said, sis, it is not enough that people have Jivu. People can still have Jivu and still be broke and still be losing money. They will make money, they will think but they will lose it. When people lose money, they don't post. Have you observed? That is only profit. People are put, and it sets the wrong expectation. That's one of the danger of trading. People show you results because that's what you're also looking at. You're not thinking about process. You are just result. Yeah, people are making money here, and then you jump in. Oh, when people lose, people don't post. People don't post when they lose. When their account drop by 50%, they won't post. They will suck privately. So those false realities, me, I don't want it. That's why I keep shouting when I see people using outrageous risk. How much money? See, what's chasing you? Do you want to be successful in this market, or you just want to quickly make money and you won't last in this market? You will not last that way. So risk management is very important. Make use of your risk reward ratio. Decide what is going to be part of your trading system. Okay, and stick to it. It is your trading system, is your process that makes you successful, not Jivu. Jivu will help you make money, but it will not help you be successful. Jivu will help you make money, but it will not help you to be successful. Note that what I said. Strategy will help you make money. It will not help you to be successful. It is your process that will help you to be successful. It's your mindset that will help you to be successful. It's your way of thinking. If you are a negative person, you cannot succeed in Forex. Change your mindset. Think positive. Look for the best. A loss should not change your overview all of a sudden. The fact that you blow one account should not change your overview all of a sudden. Very important. Okay, guys, I think that's gonna be it for me, except there are questions. That's gonna be it for me from this point, except there are questions. I think did I send this out? Okay. Any question? I'll be waiting if we have questions.
This is an opportunity for you guys to throw your questions, learn one or two things.
Okay. So, this is the US 30. I think it's still looking good for. It's very bullish on 1 hour, but we have a divergence on it. So I think, sis, did you get this straight?
No, I didn't get into this trade though. The US 30, no.
I think I sent it to you.
Ah, okay, I didn't get into it. For a bull. Oh,
No,
really? I didn't
I
see
know
this.
is a divergent cell. Is a divergent cell. But the higher time frame is bullish, but there is a shift in the bull. So we may see it sell off for some time. No, may see it sell off for some time. So anyway, so we had a divergence sell on 1 hour. Okay, but right now on 1 hour, which was a 5-point sell, is sold off, but right now it's just ranging. It's just ranging. So, but I still expect it to drop significantly because if you check smart scanner, US 30 smart scanner, we probably have a zone there. Yeah. So yes, we have it. I can see it here. So it's bullish right now. It's bullish right now, but we have this zone there, and then we'll see if it's struggling with it. But then I just think that we may see it drop a bit. We may see it drop a bit, except it breaks this. So anyway, I think I sent it. Stop loss is there. All of that thing is there. We see how it plays out. US 30. So also quickly, for the sake of those of us, I think who have not watched Sniper Pro videos. Sniper Pro is one powerful strategy, very, very powerful. Very powerful. The consistency is mind-blowing. And I think that amongst other scanners that are also available for us to use in Jifu, you may also want to consider. You may also want to
I
consider.
can't hear you.
You may want to consider Sniper Pro. Hello, can you hear me?
I cannot hear.
I can hear. Oh.
Okay.
Are you saying something?
Are you talking
I
to
can
me?
hear. I can hear Pastor Ayo.
I certainly can.
Can you check your can you check your your audio? You have removed your audio. That's why you can't. It looks like you have removed your audio, ma. Your audio has been disabled. It's looking like that from here. So this earlier today, this morning, just that personally, I see some of these trades, but number one, personally, I don't want to be calling trade because that's not the whole essence of. Then number two, I see that we have a lot of trades on the group already. So, but there was this buy earlier in the morning on GU. It was divergence. And the interesting thing is that the stop loss is very low, less than, in fact, you could have done 5 pips stop loss or 6 pips stop loss earlier in the morning. And this ratio 1 to 10, almost 1 to 11. Okay, fantastic trade. So I'm still in the buy, but I think Let me see what 1 hour is saying. I'm still in the buy. 4 hours too is bullish. So, but because there is a zone up there, I don't know. I'm thinking of taking profit now, or maybe I just leave it to go further because of what the higher time frame are saying. The higher time frame are saying that it may still go up. It may still go up. I'm looking at GU coming all the way up. So since I know it's bullish, I'll just take some profit and leave the rest to run, because GU may come into this place, which is still how many pips to get it. But this is swing trading, almost 600 pips. So, but don't forget, this is swing trading. This is for people who can stay in the market for 1 week, 2 weeks, 3 weeks. Okay. So if that's not your trading style, if your trading style is in daily intraday trading, you should have got out of this trade by now. Yeah, and that would have been a good trade all the same. So we are having some really fantastic trade setups on Sniper Pro, and they are playing out so well. USD JPY, I think there was something on it also earlier today. I don't know if that has also played out. Yes, it has also played out. Guys, don't play with Sniper Pro. You don't want to play with Sniper Pro. You don't want to. You don't want to. Guys, I would love you to share your result on Sniper Pro for those of you who have been using it. Look at this. Look at this. This USD JPY this morning. Look at that. Look at your risk reward ratio. You reach 21 pips, gone because it's just maybe 15 pips to make 165 pips, and it's still going down. It's still going down. That one I can tell you. If you go to 1 hour, you see it's still going down. At least you should get here, or you should get here. 1 hour called it, 15 minutes called it. Don't joke with Sniper Pro. If you are using Sniper Pro, can you put in a 5 in the chat box? You are using Sniper Pro right now. Put in a 5 in the chat box. Wow. So a lot of us are not using it. Oh, Esther using Esther. How has your win rate been so far? How's your win rate been using Sniper Pro?
Good evening, sir.
Yeah, good
My
evening.
win rate has been like today. I used the Sniper Pro on my live account, though it's a small account. It is a $68 account, and today from the Sniper Pro, I made $9.83.
Oh, great. Which setup? Which trade
GBP JPY for a sell.
for yourself?
Yes, he gave
Fantastic.
me a divergence on the 1 hour time frame. Then gold gave me a divergence for a buy on the 15 minutes time frame.
Wow, I can see the divergence on 1 hour B.
The gold was on 15 minutes, but the
And okay,
GBP JPY was on 1 hour.
and it was a 7 point.
Yes.
Wow. Guys, just look at that. Look at this JPY. Are you out of it already? Because it's still selling.
Yes, sir.
Look at this. This is wide. This is what we are talking about. So congratulations, Esther.
Thank you, sir.
Okay. Okay. Benga says that he only looks at the color. Okay, Benga, what I would advise, there is if you have your scanner, your subscription, reach out to your upline or Madam Bookie. There is a YouTube training on it already that has been done. You can just watch it, and you will understand it basically. It's just you have to learn how to use the divergence, or you use the ball, okay? These days, the divergence alone is enough, self. These days, the divergence alone is enough. If you are just looking out for the divergence, it's simple. Once you see a divergence, either on 15 minutes, 1 hour, 30 minutes, okay, take the go in on it, put in your stop loss, and then divergence will always give you its own take profit, like what you are seeing right now. This was the stop loss for this trade. This was the take profit one, take profit two. Already, they have given you already. So if you don't want to use a risk reward ratio to calculate, you can use this. But personally, I use risk reward ratio because if their own does not guarantee me 1:3, I want to make sure I get it. Okay, but then look at that divergence here. This was yesterday. Did it buy? It bought. The same GBP JPY, it gave us divergence here yesterday. All you have to just do, the scanner has done all the work for you. And look at that, it bought 1:3. This 1:4. This is good one. It bought, profit taking. This money again gave you divergence, sell. DJ, the truth about Sniper Pro is that you can pick only one currency and be 1:6. It has double my risk reward ratio. Good, you take profit. Look at here. I'm sure there was a divergence here. Yes, there was a divergence. But because it's been long ago, the divergence has disappeared. Look at the divergence. This was the divergence. And did it sell at that point? You look at it. Yes. Don't play with Sniper Pro. I'm begging people. Don't look. Is this not money? 1:8.3. No, I don't go to trend wave. Oh, guys, please note. I take only my trade on Sniper Pro. I don't compare it or use it with other scanner. I think Sniper Pro on its own is self-sufficient. Most of the things you want to go and look for in other scanner, you can find it. The trend counter is there for you. The points is there for you. The volume and rate is there. And then look at your Bollinger Band and all of those things with divergence. So I usually don't use it with any other scanners. Okay, but if using with any other scanner is what works for you, then good. But trust me, guys, this trade, I mean, what do you call it? This Sniper Pro is okay. So now I'm trying to see a trade that failed in Sniper Pro so that we show you, okay, it's not all wins, so there can be losses sometimes. So okay, so but it's so it's so difficult. Papa. If there was any loss for me, most of the kind of losses I have is I entered the trade caught by Sniper Pro. It has already gone to profit. I did not manage my trade. I did not break even, and then the trade eventually now turned back, to hit me out on stop loss. Those were the scenarios of most of the losses. Most of the losses. There are few times Sniper Pro called the trade and it went to his stop loss. Very few times. It has happened before, but very rare. Okay, but am I saying it's 100% fail proof? No, it's not. What's important is not the scanner. What's important is my process, my system, my trade planning, my exit and my entry and exit strategy. Those are the most important thing as far as this is concerned. Okay, guys, that's it from me. Thank you for your time. This is almost 2 hours of this training. Thank you for your time all the same. If you gained something, got value, learned something, put in a 10 for me in the chat box.
Put in a massive 10. 10, 10, 10. Come on, guys, let's type it out. 10, 10, 10. Put in a 10 for our dear coach. Put in a 10, 11 over 10 as a matter of fact. If you gained value on this training, on this session, phenomenal, guys. This is really, really big. This is huge. Forex trading is not a sprint, it is a marathon. You need to understand it and you need to be ready to follow the process. You are not just a trader, you are an investor. Think long term. Plan the 7 figures, the 8 figures, the 9 figures. Stay in the game. Adhere to your risk management, and you will be in the game for a very, very long time. Thank you so much, Pastor AY. Thank you so much. Great value here. Thank you so much. Guys, I will put the recording of this on the group. So go over it again and again. Thank you so much. God bless you. We really appreciate you. And we'll call it a day. Is that it? Does anybody have a final question? All right, guys. So with this and your Jifu, with this training and your Jifu by your side, you have literally become unstoppable. So go and do the numbers. Like he said, it's not good to do the numbers. It's not good enough to just do the numbers. What is more important is that you keep the numbers. So you don't want to win today and lose tomorrow. This is the strategy that successful traders use. This is it. Money management, risk management, psychology. Confess it, believe it. Proper risk. Don't overexpose, guys, and you're on your way to winning. Thank you so much, everyone. Thank you. God bless you.